S&P is looking pretty good heading into the bell. Kevin Green joins us for a look at the flows and the key levels. KG, pretty good week as we are sitting pretty close to these records. We're going to maybe make one last push?
We're going to try here, Oliver. I mean, we are fading a little bit. If we're actually looking at this intraday chart, we do have an area of resistance at 58.75 level that we kind of highlighted earlier this morning. And then we also have the negative gamma area, which is going to be 58.50. Now, there is a little bit of pen risk at 58.50, so we have to be mindful of that. But we were in this nice ascending channel for the majority of the day, but we recently, over the last, let's say, 30 minutes or so, have recently actually broken that channel, which is not actually a really good sign when you're looking at the technicals. Now, you would like to see buyers kind of stepping in here at around 58.58, which is going to be that dealer pressure area or that net neutral area here. And if not, then I think we probably still have that pen risk at 58.50, which we highlighted this morning. Okay.
And the trader we were looking at yesterday, that QYLD fund that was making some moves ahead of expiry, how did that fare today?
Yeah, I mean, it was very interesting. Actually, if we looked at the NDX on an intraday basis, we did see those new covered calls being put into the market. Now, the new strike is going to be 20,300. And at that same time, the NDX was trading around 20 points ahead of higher than that strike. But as these market makers were kind of layering in their short positions in order to hedge the longs that they were taking on the other side of this, the market was actually just being compressed to the downside. And we were pretty much sitting at around 20,300 for the NDX for a considerable amount of time until they got really close to the end. And that's actually when we started seeing that final push to the upside here for today. So a little bit of pressure, but now we have that trade all set and done. Now that will be expiring November 15th, so the November monthly expiration. So we'll put that on the calendar for in the next 4 weeks, and we'll see how the market reacts when that it starts to roll off here again. But once again, minor intraday pressure. Once that was all over with, we pretty much were able to try to push for intraday highs in the market. Now we're just kind of failing them a little bit.
Okay. So we looked at volume, and it seems like we should have support pretty close by, even if we slip a little bit. Some of that kind of upward momentum ebbing a tiny bit lower. But the buying pressure nearby if we do start to slip?
I'm not sure if it's nearby, but I would say 5,800 would be like that clear area of buying activity actually happening in the market. So if we kind of look at the longer time frame, we had that 5,800 level, kind of highlighting that negative gamma area that we kind of talked about this morning. That has been a proven area of not only resistance but also support. So that would be your major buy area going into for the market for next week. That you would hope that buyers would actually step in. But if you kind of look at this chart, we are starting to range out here a little bit, even though we are making new all-time highs. So this compression might be, we might be losing a little bit of steam for now, especially on a Friday and monthly expiration. We would expect to have a little bit more fireworks. It just doesn't seem like that's the case. And then once again, I think we may come down and probably test that 58.50 as for pen risk for the remainder of this session if we're not able to hold these current levels.
Okay. And then next week with a little bit of a busier calendar, maybe some potential to get some movement, or do you think the real melt-up style action will have to wait till post-November? Our guest at the top of the show, Arnim Holzer, was arguing that some of that election vol has been seeping out. What do you think?
I don't think the election vol has been getting out of the VIX for right now. What I do believe is that we have a little bit more of a normalization. So, an 18 or an 18.5 VIX probably is the equivalent of a 15.5 or 16 VIX without the election being in place. So I think that actually provides us a really decent environment. Now, for next week, I would expect that the open interest levels that we've been looking at all week are going to kind of expand out here a little bit. That 58.50, which we're kind of talking about today, this morning's expiration had a lot of positions there, and then this expiration that we're going to have today, it has a lot of positioning there. So once those kind of roll off, hopefully we can kind of widen out these gaps a little bit. And as you know, as we widen out those guardrails, we get a little bit more intraday action. We can flow a little bit more freely here. So that's what I'm kind of looking out for going into next week. And then from a technical standpoint, I am a little bit concerned about these. There's smaller wedges within this overall wedge pattern that we've seen over the last 3 months. We're kind of hitting that near-term peak for this current wedge that we're in. I would not be surprised if we actually do see a little bit of a pullback in the market before we actually try to break out higher, and maybe a pullback to that white line, that support line that we have for that channel, which would be around 57.75, around that 5,800 level would be healthy enough for us to try to regain a little bit of steam, kind of get some of the froth out of this market. Because if you kind of look at the stocks that are actually popping here today, Oliver, I wouldn't. They're risk on and speculative, but you could tell that there's a lot of optimism for these names that have been heavily shorted over the last 2 to 3 trading sessions.
All right, escape from the wedge. It's been our theme this week, and it seems like it's been working pretty well, but can't break totally free from it. Like that perspective, still up and to the right is good. Advanced decline up and to the right. See if next week we widen out the range a little bit. Thank you, Kevin Green.